Hi, this is Alvin from Dr. Wealth. I want to go through and review some of the momentum trade ideas today, and we will start off with understanding the current market condition where the stock market is based on the indices, and then we'll zoom into the sectors to know which sector is actually doing well and which sectors are not doing well. You might be surprised that given that the overall market condition now is bearish, there are still sectors that are actually maintaining the momentum or maintaining the trend. So we'll look into them, and then we'll zoom in further to give you 3 momentum trade ideas that you can consider. But before we begin, just to clarify, I'm not a financial advisor and I'm not giving you any financial advice. I'm just giving you ideas for you to consider. And of course, I do not know your situation and whatever your portfolio makeup is. So you have to make your own assessment whether these investments are suitable for you. So let's start with the S&P 500 index. And over here, you can see that I have some moving average indicator. The red line is the 200-day moving average, and then the 100-day is the blue line. And now the price are below both the 100 and 200-day moving average. This is a very bearish sign, and it is still on the downtrend mode, which means that the overall market condition is indeed bearish, and it is difficult for majority of the stock to be on the uptrend. Most of them are likely to be on the downtrend, and there isn't any sign of rebound at the point of recording. Right, so that is the overall US market barometer that we're talking about. And then the next one we look at is the QQQ, which is ETF tracking the NASDAQ 100. And you can see similarly that the prices are below the 100-day and 200-day moving average. This is also a very bearish sign. And I label over here, that at some points that there's a death cross, right? If you use a 50-day moving average, the 50-day actually will cross below the 200-day moving average faster than the 100-day could. So which means it happened around March this year, and now we are in May at the time of recording. So the death cross have already begun, and it is another very bearish sign for that. It's very hard for the index to recover. Not that it couldn't, it's just you need a lot of good news to recover from where we are right now. And then further on around April, they couldn't break above the 200-day moving average. That became another critical resistance, and it just went all the way down even until today. So that is where we are right now, and I don't think that we are going to see any rebound anytime soon, which means the tech stocks are more bearish than the overall S&P 500. The reason is because it's down a lot more. So let me just maybe measure how much the drawdown is from the peak, okay, roughly to where we are right now. So SPY is down about 16%, and let's look at QQQ. Okay, let's look at QQQ. Okay, over here from the peak, I think I need to zoom out a bit, okay, and then I can zoom in over here. Okay, QQQ is down about 27%. So we can see the difference. SPY, which is S&P 500, is down 16% from its peak, and while QQQ is down 27%. So in a sense that the tech stocks are definitely more bearish than the S&P 500, which includes a lot more other sectors rather than just tech alone. And this is due to the interest rate that's going up to combat the inflation. And it seems like the Federal Reserve is still bent on increasing the interest rate. It's just a matter of how much and how fast, and they are also going to withdraw the liquidity that has been injected via the quantitative easing in the past 13 years, right? So now they're on a phase of quantitative tightening, so which means that even from an economics or fundamental perspective, the market is more in a bearish mode. And we can also see the long-term bonds in the US is also down, right? So this is a period where both stocks and bonds are down at the same time. They are correlated. And because interest rate move opposite to bond prices, so when interest rate goes up, the bond prices go down. So even the bond market, it is bearish, right? So where are the pockets of opportunity for investors who don't want to short the market? If you still want to go long, right? Where are the possible stocks that we can look at? So now let's zoom into the sectors. I have the first one, which is the materials sector, right? Materials, and it is pretty flat. Okay, they are not down, right? So which means this sector actually outperformed S&P 500, but it is not showing a very strong uptrend from here. You can see that the prices are also below the moving averages, so it is not that bullish from this point onwards. So it is not a sector that is the most exciting to look at. And the next one is communication services. You can see this has been down a lot. Okay, let's do a measurement over here. All right, from the top, okay, to where we are right now. It's 32%. So it actually underperformed the S&P 500 as well as the NASDAQ 100. So the telcos, which are in the communication services, have been doing very badly. And then the next one is energy. And that's not surprising given that the commodities market have been doing well. Energy has been shooting up. And in fact, this ETF has just made a new high recently, testing the new high, right? So we don't know whether this will go up, but definitely this is where the momentum is, the energy sector. And the oil majors, the oil and gas stocks are probably running as well, right? Because the entire sector is running. So you'll give the sales some wind for the momentum to carry them forward. And later we can look at some of these stocks, right? And then the next one is financial, the banks. They are not doing well. Okay, similarly, they are in a bearish mode. The prices are below the moving average. Next, industrial is also below. Okay, so far what we have seen is only energy is going up. And this is consumer staples. This is holding up well, right? You can see the prices are still above the moving average. The trend is still intact. And that means that this is the second sector that we can look at in terms of finding opportunities. Okay, but the momentum is not as strong as the energy sector. Next one is utilities. It's also holding up well. The prices are above the moving averages. Okay, so this is also not as strong in terms of the momentum compared to energy, right? It's a lot steeper in terms of the gradient. And I also use this exponential regression to measure the momentum, right? So for energy is 98%, while the utilities is at 16%, 17%, right? So the energy sector again is a lot more bullish. Next one is healthcare, bearish, prices below the moving averages, and this is consumer discretionary. It has also dropped quite significantly, right? Because probably the market thinks that luxury goods are not going to do as well during a period of inflation, and the consumer staples are on the other hand different. It's something that you need every day, right? Daily necessities. So they could hold their prices well. So these are the major sectors. We have eyeballed that the energy is the best, then it will be your consumer staples, and then the utilities. Okay, so these are the three sectors that are still having the uptrend intact. And I just want to quickly go through a few more that you might be interested in. Like semiconductor, a lot of people talk about the shortage and then how the companies can be doing well because of the shortage, they can increase prices. But based on the chart, we see that the trend is actually down. Okay, so it is unlikely that semiconductor is going to do well in the near future. So when we look at momentum is usually when we talk about whether they're doing well or doing badly is usually on a short term, and short term we mean weeks to months. Okay, it's not in terms of years. So in terms of the next few weeks or next few months, semiconductor would not do that well, right? So contrary to what people think, if you only look at fundamentals, you think that the prices could be increased, which in fact the fabrication companies have increased prices, but these share price are telling us that the sector may not be doing as well as we think it is. Okay, and then lithium battery, right? With the rise of electric vehicles, the demand for battery should be going up, but same thing, the share prices have been going down since last year, end of last year, and it is more in a bearish mode than a bullish mode. Okay, so same thing, there is some warning sign over here. And as well as EVs, okay, it has been down since the start of the year, right? So even EVs are not doing well. Okay, so this may be some of the surprising sectors that on a fundamental perspective you think that is doing well, but from a technical technical perspective they are not. Okay, so this is something to watch out for. And not only the commodities in general are doing well, but not all commodities are doing well, right? So I also want to look at some of the ETFs that were tracking some commodities that I noticed. So one of it is the metal, right? And these are stocks, okay? These are not exactly an exposure to the metals. Okay, they are the mining companies that dig out the metals and sell them. So there is a little bit of difference as compared to buying the metals directly, right? So there is some derivation from that. And you can see that this ETF, the iShares MSCI Metals and Mining Producer Fund, have recently corrected, right? So I actually was having a long position on it, and after that, due to the correction, it went below the moving average. I actually got out of it. Okay, so that's why I noticed that the metals are getting weaker, And copper as well, right, which is one of the metals, have went down quite a fair bit, okay, where I was looking at whether they can break this resistance, okay, but unfortunately it couldn't, and it just went down all the way. So this is also another sign that the copper and the metal sector within the commodities are weak. Gold as well has gone below the moving average. Okay, so this is also something that the trend couldn't sustain. When the war broke out between Ukraine and Russia, the gold prices actually shot up. But then after that, even though the war is still ongoing, somehow the market didn't get very involved with the development in Europe, right? So the prices also came down. Okay, so another thing that to note for gold is that it tends to thrive when there's a crisis or when there's hyperinflation. So even during like normal or say high inflation but not hyperinflation, gold tend not to do that well. And indeed, the technical analysis also tell us that it is more on the weaker side. Okay, and these are some other commodities. The grains are still doing well. These are direct replication of the commodity prices. Okay, so these are ETFs. This is the corn ETF. You can see that the prices are still going up, right? The uptrend is still intact pretty much, and is in fact testing a new high. Wheat, having reports about noodle prices are going up. Anything that's wheat based is going up, and the momentum is strong as well, and it's been holding up very well, and it's trading very far away from the moving average. It tells you that the strength of the trend is very, very strong for this wheat ETF. Okay, so both fundamental and technicals are saying the same thing. And then there's soybean, right, which is another grain, and is doing well too. Okay, so you can see where the opportunities are actually still in the commodity sector. And if you want to buy stocks, then you stick to the sectors that we talked about just now, the oil and gas sector, energy essentially, and we talk about the consumer staples, and lastly is the utilities. Okay, so I want to pick one from the energy, and I actually pick Chevron. Okay, just for this disclosure, I do have a position in this counter itself, and after a brief correction 2 weeks ago, it actually rebounded. So this is a good sign that the strength of the trend is still there, and the momentum is still good above 100%, and it's testing a new high. Okay, and given that Warren Buffett is also buying Occidental Petroleum, he doesn't, even though it's at an not all-time high, at a 1 year, 2 year, or even 5 year high, he is still willing to pay. And we know that Buffett don't really overpay for things, which means he is very bullish about the oil and gas sector. And if you ask me, how long can these oil and gas prices go, right? How much more can it go up? It has already went up a lot, right? The thing about momentum is that we never know how long it can run. Sometimes it can run for an entire year or even more than a year, and the prices just keep going up and up, right? We never know. Okay, so we just be nimble and let the market decide. And if the momentum is strong, the chances are, or the probability are higher if you follow the trend than to go against it. So I know that a lot of people don't like to buy high, right? But if you want to make money in the short term, usually you go with the trend. Buy into strength, not buy into weakness. Okay, if you want to do long-term investing, then buy into weakness. It's fine, right? But if you want to do more kind of a momentum trading, you have to buy into strength, because the probability of it going higher is more. And you can take a look. I can just give you an example, right? So for example, you look at this stock last year, December. You see, this stock is very high already. It's at the top right-hand corner of this chart. Okay, little do you know that it break new high, right? It break new high. It break new high again, break new high again. It just keep breaking new high, right? So a lot of people don't understand that a stock can break new high for many times within a year, and that's why momentum works. And it always surprises. It always stay at the top right hand corner of the chart. If you focus on this area, you can see it just keep going up and up and up. While you think it's very expensive, it just keep going up. Okay, so instead of guessing where they will be going, which is almost impossible, go with the principle. If the momentum is high, go with the trend. And of course, it's not just about buying one stock. Since I talked about Chevron, please don't go and just buy Chevron and put 100% inside. There should be some degree of diversification. All right, so this is one of the trade ideas within the energy sector. It is an oil major. I think this is the second largest weightage component in the XLE ETF. right? So the first one is ExxonMobil, right? But this Chevron has a stronger momentum as compared to ExxonMobil. So that's why I picked this, okay? The second one is from the consumer staples group, is Archer-Daniels-Midland company. It is a commodities trader, right? More in terms of food commodities, those grains and things like that. Not so much of energy, okay? So they don't really do energy, but they do more on food, those kind of raw materials for food. And there is a correction for the last 2 weeks, so it comes in nicely and you get to buy at closer to the moving average, which means your risk is lower, because I always use this 100-day moving average as a gauge to exit. So if the price go below, I will sell, right? So I also have a position in this stock, okay? It has come down nicely, so I thought that it might be interesting if you want to buy after a brief correction, but yet the uptrend is still intact and the inflation story is still ongoing. And the momentum is still good, right? Above 100%, which means the strength of the trend is still there. Okay, so this is from the consumer staples. That's the second trade idea for this week. And then the third one is a shipping company. And I also have a position in this EGLE bulk shipping together with other shipping companies. There's quite a handful of them. And they are all doing well, which means this is a sector play rather than just this specific stock that is doing well. There was a bit of uncertainty and the volatility is quite high, right? It can go up and down 6-7% or even 8% within a day. Okay, so you must be able to withstand the volatility. You can see the degree of volatility is a lot higher compared to the past. And shipping has been increasing the freight rates. Okay, there's a lot of how to say, the cost of shipping has gone up, right? And they were translating this cost to the people who are ordering these spaces to transport their goods and services, right? So they are doing well. Some even have like a record earnings. The one that like a Pacific Basin in listed in Hong Kong, they actually have the best ever earnings, right, in the latest results ever before, okay, and they are not even at the all-time high yet. So there is some pockets of opportunity in the shipping area, but the one with one of the highest momentum is this EGLE bulk shipping. Okay, so this has not really run after it has consolidated a while, right? So if it really break new high, it will have more legs to run. So this is another the third trade idea that I want to share with you about. Okay, so I repeat the summary for this week. Okay, we have seen that the overall indices are weak. S&P 500, NASDAQ, they are still down, they're still bearish, which means majority of the stocks, especially the tech stocks, are not going to do well in the next few weeks or next few months. Okay, that is just a probability. Of course, we can be wrong, but the purpose of using momentum is to be flexible. And if the trend changes and the trend in tech stocks come back, we will ride on them, right? But not at this point in time. And the sectors that are still resilient and still on the uptrend would be your energy, consumer staples, as well as your utilities. So these are the three sectors you may be able to dig into the stocks, individual stocks, and find some ideas from there. But today I share with you three ideas. So the first one is energy, from the energy sector, which is Chevron. The ticker is CVX. Okay, it is one of the oil majors, and the uptrend is still intact, and it has a high momentum than ExxonMobil at this point in time. And the second stock that I shared is the ADM, right? Archer-Daniels-Midland. It is a commodity player in the agriculture or in the food segment, and they just have a very nice retracement, and momentum is still good, uptrend is still intact, which means you might find a good angle to get into the trend at this point in time. And then the third one is EGLE bulk shipping. Is one of the shipping companies that has been doing well in terms of their share price as well as their fundamentals as well, right? So these are the three ideas, and hopefully you may find some opportunities, right? You can also look beyond these three ideas, and I hope that you will have enjoyed this video. Please remember to give me a thumbs up as well as to subscribe to this channel, and I will share with you more of these momentum trade ideas as we go along. Right? Good luck, and I see you around.